This trade was taken at the break of this level in a buy position. Let me show you guys why I took this trade. What does the weekly show us? The weekly show us that price wants to move up, or price is moving up, I should say. We never know what price wants to do. Definitely, but it shows us what price is doing in the meeting. From line to line on the MT4, MT5 platform, this is a year. This is a 200 period moving. So for a year, price has been trading to the upside. Okay? Price has been trading to the upside. So until price begins to trade below this level here, then we will continue to look for buy positions on the pound CAD. Now, once price breaks this level, if price decides to break this level, then we will look for sell positions. But as for now, because the dominant direction of the trend on the weekly time frame, which gives it more validity, makes it a more valid trend, is to the upside, especially when it's supported by the 200 period average. Okay. Now let's drop to the deal. Here's where things get really interesting. Now we know we're only looking for buy positions. Only buy positions. Right? So we're not interested necessarily in a sell position unless we feel price is retracing. Right? So there are times where we will look for a trade that's opposite of the major trend. Right? But for the most part, we're looking for buy positions. Now, here's where you break down. This is how you break down a chart. So let's recognize where we are in the month, in the year. So we are in the month of July. On MT4, from line to line, it shows the entire month of candles when you're on a daily time frame. Okay? So, in order to kind of figure out what price wants to do for the month of July, we have to look back and see what price did in June as well as May, right? Even somewhat in April, but let's stick to June and May, okay? Now, keep in mind, we already know that price is in an up move. It's in an up move, right? So now, we see right here, June, price retraced down. Why did I call this a retracement? Because it's selling against the dominant trend, which is up. So here's what happened. Grab my Fibonacci tool. In May, price traded all the way up. And then it retraced in June to the 61 point golden ratio. 61 point. This is, most traders would consider this the perfect place for price to retrace and then get back in line with the dominant trend. So, like I said, if you can read the chart data to know where you are in the month, know where you are in the year, even as far as knowing where you are in the week, then trading becomes that much easier, right? Because price can only go three ways. It can either move sideways, wait for a breakout, or it can move up, or it can move down. It can only move three ways, right? Your job as a trader is to, with the highest probability, be able to decipher based on the clues of the market which direction the market wants to go, or which direction the market is going. And if you are wrong in your analysis, you only want to lose a little bit of money. And then you want to get in line with the correct analysis, whether it's waiting to see what the market is going to do, or getting in, waiting for a new setup to get in the correct move of the market. So trading, as long as you're losing less money than you have potential to make, you can be a successful trader. It is not that hard. You want to be patient. You want to learn how to read the chart data, and then you want to risk less. You want to lose less than what you can potentially make. All right. With that being said, price went up in May. It went up about half of the month in June, a little less than half in June, and then it retraced. Well, we knew the retracement was coming because this is a previous level right here of resistance. All we have to do to confirm that is just look back. Let's go to the month. We can look back right here and we can see that there was a strong possibility of price retracing based on this previous month of resistance. You have to learn these things, guys, if you want to be a profitable trader. But once you learn it and you continue to do it over and over, it becomes like clockwork. It becomes so easy for you to recognize and see that you don't even have to trade every day. You can trade at the times that you want to trade and be able to pull money out of the market. Okay, so let's do this. Let me take this red line. It's sitting on top of another level. It's hard to get behind that. This, that out, pan out. Okay, here we go. Here we go. So when price got to here, price got to this level, it moved sideways. I said sideways, actually, I was telling you about. So as it moved sideways, I had to wait till it break that level. It touched here, here, here. So I'm not interested because I don't have to be right. Price could drop down another level, or another level, or another level. Which would, if it drops below this level, then we shift our bias to the downside. But we still have to be patient because price, yeah, we believe based on the 61.8 retracement that it wants to go up, but it doesn't have to go up. The market doesn't move based on retracement levels and things like that. Yeah, they become self-fulfilling prophecies, but that's not the way. The market makers decide which way the market's going to move. I can show you plenty 61.8 levels that broke, that did not hold, right? Okay. That being said, I still want to wait. I want to wait and see what this price is going to do. So, but I am interested in a buy. So now I'm dropping to the 4 hour. Here's why I took the trade. This is that line we just put in. So price came up, touched it, peeled off, came up, touched it, peeled off, but I'm noticing it will not break this level on this week. We go to the 4 hour. So line to line becomes 1 week of data. We were looking at a month, now we're breaking it down to a week of data. You will not break it. So we wait, we be patient. Price, it pops out of it. There it is. There it is. Then you got a level here. So it pops out, but it's holding here. The 200 period moving average is sneaking up behind it. It wants to go up. Once I saw this price begin to sit on this moving average, okay, they kind of confirmed to me that we want to get in line with the overall trend and move back to the upside. This took about a week to do, right? Because it came down here. This is actually the first touch. I didn't really recognize this touch because price pushed back off it so easily. It came down and touched it again. So this is when I really started getting interested right here. When it pushed off here. So to do this right here, it took about a week to do it. So I had, you have to be patient and wait for it. Came off, retouched it again. I wanted to wait till it break this level. If it broke this level I was in, price broke it, now it's moving to the upside. And that is why I took the trade on British pound CAD on the 4 hour time frame. Okay, now let's talk about the reasoning for my stop loss and the reasoning for my TP. Well, I can easily tell you the reasoning for my TP. This is a one-to-one. This is a one-to-one trade. One-to-one. Why is it a one-to-one trade? Let's go back to the video. Because I know price will come up here. I'm not sure price. What you got? So when I get here, I come out and trade. And if it breaks out, retest, give me another setup to go higher, yeah, I'll be interested. But when I get in here, I'm coming out of this trade. market is funny like that. I've learned over all of my years of trading, take your money off the table. When you hit your targets, take your money off the table. You can always re-enter a trade if the setup presents itself. More importantly, because as a trader, first off, you are a risk manager. That's your first job as a trader. Manage risk. You can't make money if you don't learn how to manage risk. Believe that. So, where my stop loss is way more important than the take profit. Here's why my stop loss is here. Real simple. Why isn't my stop loss here? Here's why. I believe price wants to go up. But I don't believe price would just shoot up. Price may come, play around down here. But overall, price wants to go up. The market makers will pump fake here, and anybody who bought here will go ahead and close their positions. Will go ahead and close their positions, or if you sold, if you bought it here and price continues to go down on you. Let's say you bought here at this level and price comes down here. Well, you probably would close your position. You're negative. So it'll pump fake and do a whole lot of things to try to make traders become liquidity for the market, especially if it hasn't gathered all the positions that they want here. But here's why my stop loss is here. Because if price breaks this level right here from the month of June, if it breaks June's low, then I'm wrong. I'm wrong in my analysis, because if it breaks June's low, it's probably going to drop to this next level here. I don't want to have any part of that. Or it may drop to this 200, trade up, and then go down again. Either way it goes, I don't want to have any part of it. So price can maneuver anywhere in here. I'm fine. A lot of trades. When you first open a trade, you're always in negative. You're always going to be behind when you first open a trade. So if price does this, it's okay. I believe price wants to go up. I don't believe price is going to go straight up like it's doing now. Obviously, it's a bad example, but price is going straight up. But price doesn't always just go straight up. Price fumbles around before it goes straight up. So as long as price doesn't break the level of June, the low of June, which happens to be the previous week, as long as price doesn't break this level, I'm cool. I'm fine. I'm gonna stay in it. I'm gonna stay with it. But if price breaks this level, please take me out of this trade, because clearly I was wrong in my analysis, and I no longer want to be a part of this. So your stop loss is always going to be way more important than the take profit. If I close this trade right now at 37 pips, I make money in this trade. But if my stop gets hit if my stop was here, this low, my stop comes and get hit, I lose money in the trade. So where my stop loss is going to be placed is going to always be way more important than where my take profit is. I have to be able to justify my reasoning for my stop loss. I took the trade because I believe price wants to go up. If the stop gets hit here, price still may go up. But I know if price trades below this level, price ain't going up. Price is going to continue to fall. That is the reason why my stop loss is at the point where it clearly says you are wrong in your analysis. Hope you learned something today. Don't forget to like, subscribe, and share this video. Yeah, learn to trade Forex.